the institutional aha moment. Now, when people say this, a lot of people think that, you know, it's the spot ETFs. It's not that. It's not, because Bitcoin Jesus, Michael Saylor, has suddenly made me realize that the institutional aha moment is not the spot ETFs. It's what MicroStrategy is doing. So MicroStrategy, MSTR, is in a position to do things that ETFs can't do. And I think big companies will soon see this, and it will actually attract more inflows to Bitcoin. And those inflows to Bitcoin will be more of a positive buoyancy to the Bitcoin price than, say, ETFs. Because I actually think most of these ETFs that have put in an application, they've probably most likely already got most of their fill, you know. So if they're trying to launch a $5 billion Bitcoin ETF, I'm pretty sure that they've got that already. So a lot of people are thinking, oh, once it's approved, then the 5 billion flows in, or however many. I don't think that's the case. So for the big guns out there, and when I say big guns, I'm not talking about the BlackRocks, the Vanguards. I'm talking about just big companies. You know, companies like Tesla, MicroStrategy, that sort. You know, those are, you know, billion market cap upwards, let's say. Now, if they suddenly, you know, now, you know, we have institutional top cover, which means, you know, people, or, you know, CFOs and CIOs, chief investment officers in these big companies, they're not going to lose their job by saying, hey, we need Bitcoin exposure. Whereas back in the previous cycle, you had to really go out on a limb and go, yeah, I'm buying Bitcoin, it's the right thing to do. And then you could lose your job or get ousted. So Bitcoin Jesus, he put himself out on the limb. He had all sorts of court cases. People try to kick him out on MicroStrategy, going, what the hell are you doing with this company? You're turning it into a Bitcoin company, not an online education platform. So, but now we've got institutional top cover because BlackRock, Vanguard, Fidelity, everyone's now piling in. So we've got job security for those that actually can make the decisions. So how do they do that? They've basically got three options. They buy the actual Bitcoin themselves, like MicroStrategy. They either or buy a Bitcoin spot ETF, or buy MicroStrategy itself. So let's quickly talk about number one here. So will they actually go out and buy Bitcoin themselves? I don't believe that they will. I think it takes someone like a Michael Saylor to, you know, at the helm to do that. And I think most CEOs are not that smart. I mean, if you look at the CEOs of most car companies, most of them haven't really been in office for, you know, more than 4 years, more than 5 years. I think Elon is actually the longest serving car company CEO in the world right now. I think maybe Toyota has someone there of a similar long standing, but most are like politicians. They're in and out. They have a few bad years, then they're out. So in order to buy sort of the actual Bitcoin themselves, they need to go through a whole bunch of bollocks to do that. So for example, if I just I'll type this, it will be quicker. They have to go through hello, where's my, there we go, yeah. So they've got custodial things to work about. Why is this not typing? Sorry. I'm trying to type here. No, I'm typing but nothing's happening. Here we go. They got custodials to deal with. They got an exchange or / broker that they have to sort out. They've got compliance, legals. They've got to file and report everything they do to the SEC in advance. They'll have departmental team, or let's say a team to have to go through all of this. You've basically got, in order to go and buy Bitcoin itself, they have to develop, you know, a whole new department in their investment arm to actually go through this. Now, this is a small list, right? Custodials, broker, blah. That is a massive to-do list. That will take big companies months to do. Absolute months. So I mean, just to sort out, multi-sigs and wallets and do they keep it with Coinbase, or do they, are they worried about that stuff? I mean, this is, some companies, it could take a whole year to do this, so they probably won't bother. So the easiest thing is that they can just buy a spot ETF. Let's get the BlackRock one. It's from BlackRock. I'm not going to lose my job if it goes tits up. Yada yada yada. That's a lot easier. There's less compliance and stuff that they have to go through with that. Also, advisors, they'll then have to pay their banks to come up with some crypto advisor to give them a report. Is it safe to do so? They also need shareholder / board approval, which as you can imagine is just going to be just a massive cluster mess in itself. These companies are like massive oil tankers. It's going to take a long time for them to move on stuff. So I don't think many companies will do that. Will probably most likely flock to a spot ETF because it's just easier. Just like most companies will already own, the FANG TM stocks. Or they could buy MicroStrategy. Now this is interesting. So I think a lot of smaller companies will just end up buying MicroStrategy, or funds and funds of funds will add MicroStrategies to the list of companies that they have in their portfolio. So at the moment, it's the FANG TM stocks, so Facebook, Amazon, Apple, Netflix, Google, Microsoft, Tesla. Maybe they're adding Nvidia right now because that's going through the roof. I think MicroStrategy will also be added to that list. Now, why is that? It's different because it's essentially a long-term levered long Bitcoin company that has real-world cash flows that pays you a yield per year. That's the interesting thing. Like, if you were to break it down in a nutshell, it's a levered long Bitcoin company that actually pays you a yield. And I found this interesting. MicroStrategy has $4.5 billion worth of Bitcoin right now. Obviously that price will fluctuate with the price of Bitcoin, and $2 billion of debt averaged at 1% APR. I mean, how cheap is that? He was saying that there's one point where he borrowed $1 billion cash for 0% APR. And he bought Bitcoin with it. Literally. Free money, buy Bitcoin. So he's got this, it's absolutely insane. So here's some things the spot ETFs can't do. They can't issue debt. They can't issue convertible or jump bonds. They can't buy Bitcoin with the free cash flow. And they can't pay a YIVI or a deal. And instead they have to charge a fee. So for example, these ETFs are going to be charging anywhere between 50 to 100 basis points. So for, pleb talk, you and I talk, that's 0.5% to 1% fees. So if a spot ETF had a $4.5 billion worth of Bitcoin, well, they would be charging, let's say, $45 million a year for the privilege of that. And with the $45 million a year of fees that they bring in, they can't use that to then go out and buy more Bitcoin. So they just can't do a lot. And for the privilege of it, you're going to have to pay a hefty fee. Now, I know it's only 1%, or maybe 0.5% if it's, let's say Vanguard or BlackRock, but over a long time, that's a big difference, especially when you look at the delta compared to the yield you get from MSTR compared to the fees they pay here. And I'll go through the numbers. So instead, MicroStrategy can do all of the above. They can use debt, they can issue stuff and buy more Bitcoin with their free cash flow and create that positive flywheel. It will only get better. And they pay you a yield. So instead of paying $45 million a year for the privilege of having Bitcoin exposure, they'll actually give out $90 million a year in forms of divvy or share uplift to the shareholders. This is incredibly attractive for the big boys. And the FASB changes also help a lot. So for those not familiar with the FASB changes, it's basically changed the way that big companies can do accounting on their Bitcoin. So previously, in a nutshell, if let's say Tesla bought a whole bunch of Bitcoin and Bitcoin then dropped massively, and the Bitcoin position put them minus $300 million in floating losses, they would have to declare that on their P&L. So for the next quarter, they could have absolutely bossed it with, car sales and whatnot, but because Bitcoin had lost them 300 million, they'd have to book that as a loss. So they could actually, now this is good and bad. It would be good for taxes, etc. But with Wall Street, a lot of companies, they don't want to show a loss. They want to show profits. They want the chart to be a nice gradual uplift because they're trying to raise money. Because that's all they're doing. They're trying to raise money, and they can't raise as much money if they're showing losses every now and then. So FastB has changed it into a very beneficial way for the big companies to own Bitcoin. So, as I've summarized here, basically MSTR is better because you get outperformance of Bitcoin, because over the last 3 years it has outperformed Bitcoin slightly. Has a 2% yield. The value of the stock will accelerate as they can buy more Bitcoin at low or zero cost, and you don't have to pay for the privilege of it. And the delta is vast. So imagine a big boy coming in, looking at these three options: buying Bitcoin, buying the spot ETF, or buying MSTR. What's the difference? So let's say they're not going to buy the actual Bitcoin because it's too much of a ball ache for them. And they've got $1 billion that they want exposure. Okay, wait, I've got arrows. I don't want arrows. I want just a normal pen, please. Here we go. Click that. So you've got $1 billion coming in. Now, if let's say it's 2% yield, that's 20 million a year. Oop, not dollars. So you're effectively going to have, now I'm going to ignore compounding interest, by the way. The compounding will just re-emphasize my point even more so, but we don't have time to create a fancy spreadsheet just to show you the compounding. But let's just say 20 million a year times 20 years, that's 400 million, isn't it? 20 million times 20, yeah, it's 400 million in capital accrual. 400 million that this random company will get over a 20-year period. Okay, now if it's the other way around and they just did it via the spot ETF, they're going to have to pay 1%, so 10 million a year. So all of a sudden, times 20 years, that's 20 years. That's 200 million. Oopsie. In fees. So what's the difference there? That's 600 million delta at the minimum over a 20-year period. Now, when you add compounding interest to that, it's going to be a lot more, isn't it? So the delta really, when you add in compounding interest, I wouldn't be surprised if actually the delta between the two is $1 billion or more. Before I go any further, does this make sense? So if I'm a big company that wants $1 billion in exposure to Bitcoin, yes, the cheapest and the best way, actually no, not even buying Bitcoin. Buying MicroStrategy will be a much better and easier way because they're getting the yield on that. Buying the actual Bitcoin doesn't get you the yield. So here, they not only are they getting the uplift of the stock, because if Bitcoin goes up in value, great, it's even more so. And I'm completely ignoring the fact that MicroStrategy are I think their uplift on their multiple is a 30 times uplift. So I'm completely ignoring all of that. So there are even more uplifts which we're not going to go into. So over a 20-year period, they're saving at least $1 billion, or the double the amount that they're going to put in. I think that's incredibly attractive for a CIO, a CFO of a big company like Tesla or anyone else that wants, Disney. Are they going to? Well, mind you, BlackRock own Disney, so they'll probably just do the spot ETF. But then again, BlackRock own MicroStrategy, don't they? So if you want to go down a rabbit hole, here's a rabbit hole which you just go to Yahoo Finance. I've spent so many hours on Yahoo Finance, it's silly. So if you really want to go down a rabbit hole, you just try and find a company, MSTR, let's say, MicroStrategy. Let's have a look. Then you go to holders, and then you look at the institutional holders. Oh, look at this. Vanguard, BlackRock, State Street. You'll find that these three companies own pretty much every company in the world. No, in the US, not the world. So Vanguard has 8.45%, BlackRock has 7.26%, and State Street have 1.96%. When you add all these up, they are in a very powerful position. Don't forget, Vanguard owns BlackRock and State Street own those two, and BlackRock so they all own each other. So yeah, it's interesting. So and you can do this for, till the cows come home. You look at, I don't know, what is Coca-Cola. That's another big is that one? KO? Yep, Coca-Cola company. You go to holders. So Berkshire, so obviously Warren Buffett loves Coke, so he has the biggest chunk. But look, you then have Vanguard, BlackRock, State Street. And not only that, they have even more, because their funds, BlackRock, Vanguard, etc., they have their own funds. And look, all these funds own even more. Is Pepsi another company? The competitor? PepsiCo, here we go. Oh, look at this. Vanguard, BlackRock, State Street. So everyone thinks that you have choice in the world. You don't. You think, I prefer to have Coke rather than Pepsi, thinking you have free choice. You're still buying the same freaking company. It's the same with foods as well. The thing that I don't quite understand personally is Tesla. Like, Musk overtly doesn't like these big companies, yet when you look at Tesla, look who owns them. Vanguard, BlackRock, State Street. Again, it's always, this is the best part of 15% or more, because Vanguard, BlackRock, State Street also own chunks of these other companies. And guess what? There's other funds. So in reality, BlackRock, Vanguard, State Street own a good 20% of Tesla, which is interesting. Which is why I believe Elon was drastically trying to take Tesla private. Remember the whole 420 tweet back in the day. So yeah, because he's got these bloody overlords over him, I guess. So that's my side point. Yeah, so I think it's incredibly attractive for, I guess medium to big sized companies looking at Bitcoin exposure. And so the other thing, which actually I didn't have time, is that when you look at all of the debt that MSTR has, the average debt is 1%, right? So they got, what was it, 4.5, yeah, so they got 2 billion in debt. So, but the uplift, so I guess what is, I swear I wrote it down here, did I not? What is the downside if I zoom out? No. I evidently didn't write it down. I thought I did. Hey ho, let's just carry on. So let's go to 100%. So what is the downside with buying MSTR? You've basically, because it's only slightly levered, there's not much risk. So the risk is Bitcoin going to grow faster than 1% per year? That is literally the question. Will Bitcoin perform better than 1% per year? I think we can all say that the answer is yes. Well, how much is it going to overperform the debt or go up per year? I don't know, let's be really conservative. Let's say it's 20% per year, averaged out over time, okay? Because it's most likely going to outperform M2. M2 grows at 15% per year. The stock market grows about 15% per year. So all these ETF funds will want Bitcoin to perform at 20% or more per year, so they can justify the higher costs for this high risk fund, as they'll call it. So, but let's be even more pessimistic. Let's just say it only does 15% per year. Well, the difference here is 14%. So 14% on 2 billion is, I'm gonna have to get my calculator here. 1 second. So 2 billion times 14%, $280 million. So that's $280 million of upside yield that goes directly to the shareholders. per year. Per year basically. So so this is on top of, the 2% yield. They're also arbitraging debt, right? So there's an extra 280 million a year going directly to the common shareholders. And so if a little average small fry bloke from Norwich gets this, I'm pretty sure the CFOs around the world, once they see this, will also have this light bulb moment. Now I know for the average retail, they're like, okay, sounds cool, Siam, but so what? The so what is like, it's huge. If you were to add up, if you take all the companies in the FTSE 250, FTSE 100, the Russell 5000, basically there's a good, when you add it all up, let's say 10,000 massive companies around the world that I would say are over, that will have at least $1 billion in assets, really. What is that, a trillion? No, 1,000 billion is a trillion. That's 10 trillion. So we're looking at 10 trillion of assets that could easily flow into, or that's the pond. But what is that? What could that, as in what percentage of that is likely to get into this? Let's say it's just 1%. 1% is that 100 billion off the top of my head? 1% of 10 trillion. My math is bad, so someone check. Sorry?
Yes, mate. Good maths.
Is it 100 billion? Sweet.
Yeah.
Well, that's 100 billion that will go directly into the Bitcoin market cap. I mean, that's okay. Actually, that's not that big. But then when you look at the free float, the floating Bitcoin, there's only about 14 million on float at the moment. So it's actually 14 billion. 100 billion going into 14 million free floating Bitcoin. So you will have a slightly outsized price uplift because of that. And I don't think this will just be in one go. I think it will be stuff like, this dripping in year after year after year, and people slowly allocating more. Then it'll be 2%, then 3%, etc. And when you add this into the secret BlackRock documentation that came out last year, where internally BlackRock was saying the ideal portfolio is actually 84.9% Bitcoin and the rest stocks and bonds. I mean, this is a seismic change in the way that these institutions are going to think, because back in the day, it was always, for the last, 70 odd years, the common way of thinking is the 60-40 equity bond portfolio. Literally, you ask any fund manager or IFA these days, and they will literally just like a sheep go 60-40. And they'll put you in a basket of 60% stocks, which is, and that will consist of structured products, some lightly levered products, but all, in stocks. They may think, oh, we're diversifying you, but they'll probably just put you in UK stocks, or if in the US, just US stocks. They don't properly diversify. And then a whole bunch of bonds, and those bonds will just be government yield, gilt in the UK, or, T-bonds in the US. Like, that's not beating M2. The 60-40 portfolio does not beat the currency expansion. And I think people are slowly waking up to that. If an idiot like me can work this out, there are much smarter people out there that work this out. And all these companies, they will have teams of analysts with IQs up the yin-yang. They should get this. It's not hard. And I hope that with we've only got 36 people on the Zoom today, but I'm pretty sure all of you guys get this. So I think this is interesting, and this aha moment is bigger than most people think. So I'm not saying this is going to push Bitcoin to 500k or 1 million anytime soon. I'm actually not in that camp. I think the next cycle, by our all-time high, 1st December 2025, I'm only looking at 130 to 160k Bitcoin.